Well, let's get across the market open now. Mark Gardner joining us from MPC Markets. Mark, welcome to Monday. Now, of course, new financial year having begun, not a bad time to just review your portfolio.
Yeah, overall, I mean, obviously the budget, there was a lot of changes with the tax laws as well. So I assume that many people will be going and talking to their accountants and things, but obviously with those tax changes and then, the start to the year's been quite, hasn't looked like it's been a volatile from an index level, but intersector's been very volatile. So it's one of those good times. It'll be a quiet week this week. We've really only got Warsh's minutes. But as you see there, that quarter last quarter in the US, the S&P 500 was the second best, but the only one that beats it's coming out of that COVID low where it actually went down 22%. So in terms of taking out that bear market bounce, it's probably that's over 15 years there. It's one of the best quarters, and 87% of it was in those chip stocks and memory stocks. So we are at a pretty elevated level here at the moment. We're around that sort of GDP to market cap Buffett indicator, around 218. The record's 219. You got price to sales above 3, and the average is around about 1.5. So, not to say that it can't continue, and I don't think we've ever made a yearly high in the S&P in June. But overall, I think these are really elevated levels where you need to be a little bit cautious.
We might take a snapshot of where global markets are more generally, and particularly how Australia fits in here, because as we've said quite often more recently, the local market really has underperformed, hasn't it, relative to its peers?
Well, it has, but we're lacking those sectors, like the semiconductors, etc., where we're sort of missing out a little bit. Although some of our commodity sectors at the moment are going to see a bit of a background bid tone as the raw materials that go into building out these data centres and etc. Play out like copper, for instance. But as you can see there, the SOX, which is the Philadelphia Semiconductor Index, was up 100 at half time, half one. The Kospi, which is very filled with memory chip stocks, was a close second there. And then you've got the Nasdaq and Brent still up a little bit, and the ASX 200 there only up 1%. But our consumer staples, our energy, our materials sectors doing the best there, and our healthcare and infotech doing the worst on the right-hand side. But I think we're starting to see green shoots in the healthcare sector, particularly. We've got some pretty good bid tones going on leading into earnings for both CSL and for the likes of Cochlear, Telix. I believe it was I can't remember it was maybe Neuron last week that was. Had a little bit of a bid tone.
Yes, that was off the back of a regulatory recommendation in the EU. Yeah.
So overall, though, I think people are starting to wake up to the fact that sector's pretty cheap. Our tech sector, unfortunately, been dragged down a little bit by WiseTech, but I think that'll resolve itself over a multi-year period because there's nothing necessarily wrong with the business. So there are some pretty decent opportunities here in decent growth stocks. And I think we'll start to see those, catch a bit of a bid because they have been hit really hard. And if you go back through historical context, they'd be some of the biggest first half moves in particularly in the healthcare sector, and where those PEs are at the moment are very cheap in terms of historical context, around about the high teens rather than the 30s or 40s.
So you're looking for those opportunities in healthcare, given how far it's fallen then?
Yeah, absolutely. Obviously, CSL, there'd be a huge sigh of relief and a bit of a bit of wiping the brow for many fund managers, etc., and many individual investors. I think Cochlear, it may not necessarily turn around this quarter, but the likes of Telix, etc., were very undervalued and starting to catch a bid. They've got FDA approvals coming up, in I think September, early September. As well as earnings going pretty well. ResMed's looking okay as well. So, whilst it's been a bit of a rocky period, you've seen the healthcare sectors in the US start to head higher, and we do tend to lag by that 3 to 6 months sometimes. So I would expect it to sort of, to continue a little bit higher overall.
Now, of course, Mark, we're on the cusp of US earnings season. What are you looking forward to?
Well, look, I mean, whether these chip stocks, the chip stocks have only just really reported, so they're the furthest away. But what I'll be looking at is obviously the people paying for those memory chips are the hyperscalers. So they're largely criticised by investors, despite beating both top and bottom lines last quarter and having outstanding results. But they're the ones writing the checks for these memory chips, and they're the ones that are going to have to pass on, these price hikes. So I'd be really interested to see the sentiment around. I probably expect them to beat. The US has got it's got a habit of almost setting the analysts' expectations way too much to the dour side. But we really did see the sharp price movements come when they announced their capex, and I think a move from Meta to go into that Neo cloud recently probably is a bit of a sign that they want to show that they're monetizing in some way, shape or form, because this capex isn't ending and prices are going through the roof. So what's good for one part of the market, not necessarily good for the other part of the market. The Mag 7's actually been lagging quite badly in the first half of the year.
And Mark, this week, it's pretty quiet actually, isn't it? Certainly locally.
Yeah, look, 4th of July, anywhere around 4th of July, leading in and coming out of it, it's a huge holiday. It's summer over there. We've got a couple of small earnings, really, Delta, Pepsi and Levi's. We're not really going to see any moves out of that, I wouldn't imagine. We've got an RBA assistant governor speaking on Wednesday, but I think all eyes will be on Warsh and the Fed minutes. So he was very reluctant to give any guidance at his first press conference, and I would expect that everyone will be watching those minutes like a hawk, excuse the pun, but to see just how much he contributed basically to that meeting, and what the future moves are in terms of those task forces.
And Mark, what's your view on the developments out of the Middle East? A very slow process, obviously, given those negotiations. Mind you, critically, the focus is still very much on the Strait of Hormuz. There was obviously some issues over the weekend. Looks as though that traffic has resumed. Are you expecting perhaps the oil price to continue falling from here? I don't think falling overall. It really depends. There's a lot of conspiracy theories out there around oil, and Trump needs it down, so they've really let loose, letting free the US reserves, etc. And I think there was a few that had to do a U-turn and then went a little bit closer to the opposite side of the Iran side over the course of the weekend. I think it's going to be bumpy, but I tend to agree with the Iranians. It's like the US is a fairly unreliable partner due to Trump at the moment to negotiate with. So I don't really blame them for being a little bit cautious overall, because things tend to change on an absolute whim, and they get announced by social media, and that's how Trump likes to bully people around. It's in the art of the deal. Announce something publicly, and then it's it's the person you're negotiating with's responsibility then to basically pedal that back. So he's done that many a time across the entirety of his career, but it's still very messy, and I think we're probably being a little bit overly optimistic at the moment in terms of how many ships have actually gone through. We've got a lot of reserves that need to be refilled, etc. So I would expect that not to go too far from here. And I think the talk of it being back into surplus this quickly after 4 months of being closed, I think and natural gas particularly, that we haven't seen anything really resume there. So I think it'll take longer than what markets expect, which is a pretty typical thing for markets. We tend to just price things out immediately. Like the real world doesn't move as fast as what the markets do.